Hello to all traders and welcome back to another market review brought to you by Orbex. So are we seeing a slight decline in gold now after all eyes on the Federal Reserve interest rate decision tomorrow evening, where the Fed is expected potentially for one last time to raise its interest rate by 25 basis points. So are we seeing a terminal rate coming to this end of this story that's been dragging out for over 2 years now? You know, potential raising of rates for most of 2022, which has seen a progressive dollar against most of its competitors, especially against the euro dollar. We've seen gold really starting to be more volatile in the last few trading sessions, jumping over $80 in just a few trading sessions as well, before sinking back down to the 1960 handle. So is this just a lot of traders and economists having a few nerves ahead of the interest rate decision tomorrow? And obviously with inflation really starting to come down towards the 2% target that the Fed has, it gives more of a positive note, let's say, towards the dollar than it does gold. So basically all of that to come in the Fed's interest rate decision. Obviously, we've got more news coming out this week. We've got the European Central Bank and the Bank of Japan starting to really give their figures as well. So not only is it the interest rate decision, but it's obviously the press conference afterwards as well, if the Fed's going to take a more hawkish or dovish tone, and where that will send the dollar and gold. But for now, let's just take a look on gold, because as I said, since bouncing away from the 1900 handle, we had these lofty heights of 1980, and we did expect, you know, this kind of impulsive move to the upside towards 2000. As soon as this started going in an impulsive motion, a lot of economists were saying, well, 2000 is going to be hit before we know it. However, it has taken a little bit of a back seat. But is it just going to be slightly fundamental news for gold? Because if we look on the 4-hour chart, just to get a bit more of an intraday signal here, we are now starting to see, I'll just remove this particular line that I've made so it's a little bit easy to see. We are now starting to see this kind of bullish stance coming to an end. So we've had this kind of wave after wave of the upside. But because this particular channel to the downside has come a little bit further down than a lot of people would have liked, they're not expecting to see such a bounce back up. It might just have a slight bounce and then another move lower depending on the Fed's move tomorrow evening. Obviously, gold does take a lot of things into account. Sentiment, trading bias, you know, sell-offs. It does have quite a volatile stance. However, in the last few trading sessions, since we saw a bounce at 1900, it was very predictable that we would see a big push to the upside. So we'll wait and see how far that's going to go, and if we're going to have more of a potential move to 2000 before the end of this week, especially if the European Central Bank and the Bank of Japan have anything to do with any more fundamental moves. These are on Thursday and Friday of this week. But looking at the dollar index, just want to point out at the moment what a big shift in sentiment we've seen. So we saw this $100 mark being breached for the first time since April of 2022. That's given us quite a big lift. But as you can see here, very strong support, and now we're moving over $2 to the upside now. And this is giving a lot of traders the impetus, thinking that the Fed is going to keep on pushing this dollar valuation to the upside, because after this big sell-off that we saw recently, it is looking likely that we will probably see the Fed's terminal rate. And if we're going to see the Fed's terminal rate, what does this mean for the dollar, especially if it's a hawkish stance on the next meeting as well? So on the 4-hour chart, just bring you an intraday, so we're just getting everything that we need for the day ahead. As you can see here, very nice support, like I said. This just fell below the $100 area, so this was giving us a little bit of a signal that we could have more consolidation. But then obviously, as you see, we saw this bullish channel starting to really push a bit higher as well. So what we're looking for now is this V-shaped recovery back up to the mid or just over the $103 area, and then we'll see if that's going to keep on pushing to the upside as well. So just keep an eye out on the fundamentals this week. You know, we're going to be keeping you up to date on our Telegram channel to see what where the market's going, what we're expecting, and obviously the big Fed Reserve interest rate decision tomorrow, and then we'll see what happens later in the week with the European Central Bank and the Bank of Japan as well. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.